Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back, everybody. Let's take a look again on the Bitcoin market. So as usual, we have prepared the fundamental report on the Bitcoin, and in the center of our view obviously stands the halving stance, but at the same time we are considering few issues that somehow has been missed by the media and was not as popular as a halving topic in the news stream. So for example, would you know that actually the participation of the institutional investors with the Bitcoin ETF stands very low, and most burden stands upon positions of the individuals. Also, we have considered some myths around the halving, that theoretically it should boost the demand for Bitcoin because reward of the miners become smaller and amount of the new coins also will be smaller. That's why it should start rising in the price. And a few other interesting moments that in fact absolutely doesn't relate to reality. So taking all this stuff together, we're making some forecasts concerning the Bitcoin market and showing you that not everything is perfect as big banks, big media trying to assure us. In reality, Bitcoin really stands at the very well, I would call it as some kind of the vital moment, critical moment. If it will step down here, we could get at least stronger retracement, but potentially with some circumstances it could really turn to collapse. So that's why currently it's very tricky moment for Bitcoin as well, and you will read what we're talking about, you'll understand better. Concerning technical picture, once again, as we come to the end of the April, so today, tomorrow, last session, let's take a look, market is dropping back again, and once again the shadow of the possible engulfing pattern stands on the horizon. So if market will close somewhere in this area, I would treat it mostly as a short-term bearish signal, because it will be some kind of the wash and rinse of the previous top and bearish engulfing pattern, suggesting that we could get at least deeper retracement. I'm not talking right now on a strong reversal, but at least another step down where the retracement could happen in May or within the two months. That's what we could consider on a monthly chart. On a weekly chart, it's also to take a look that despite that grabber is still valid, and that was our most important pattern, actually we have used it for possible taking the long position, market for a second week is dropping lower. Nominal trend here also has turned bearish, as market is drifting back down to the lows to this of this consolidation. Maybe it wouldn't be so dangerous, but if we'll take a look at the lower time frame, you could see more bearish signs. First of all, on the daily chart, you could see early reversal to the downside. So market was going higher. If we consider this ping pong from the trend lines inside the D triangle, here's was nice bounce out of the support, but suddenly it stops and turns down again. Early reversal inside of the triangle, you know what it means. So by classical school of technical analysis, this is bearish sign, and this suggests that market was not able to reach the opposite border and turn down earlier. Besides, here on top you could recognize evening star pattern, candlestick pattern. Now we're going to most interesting stuff. If you remember, previously we were considering this hand shoulders pattern, and we said that once market will form lows around 60 to 63 area, we could consider taking the long position. So we've got some bounces up here. First bounce, next action. Second bounce, downside action once again. And all this stuff starts looking as a bearish dynamic pressure. That doesn't correspond to idea of the bullish reversal pattern. It means that we're now see possible hand shoulders failure, which in turn suggests drop below the 59 area. You could understand what will happen. So if market will drop below 59, simultaneously this will be this 4 time frame chart, this will be dropped back down to these lows, and it's really a big question what will happen around it, whether the market will be able to stay here. But automatically it also could mean erasing of this grabber and finally completion of this engulfing pattern, which is actually most important right now. So taking all together, currently with this shape of the hand shoulders as it stands in the failure direction, we're not considering taking any long positions anymore. So market was not able to form bullish pattern, context has failed, or better to say has not been formed, and that's why currently it's not time to consider new longs. So we need to wait and see what will happen. For the taking the short position, theoretically you could try to do this on intraday charts. Your target will be at least these lows, so market should challenge it. So not necessarily it will be direct straightforward breakout, but at least some flirting around, the touching of them. It's normal price action when we're dealing with the failure of the hand shoulders pattern. That and towards what we have on Bitcoin.